Hi there, Holly Shields here for Kalkine Media. What is over-the-counter market and how is it different from an exchange? Let's break it down. But first, subscribe to our channel and press the bell icon to stay ahead of the game. Over-the-counter, or OTC, is the decentralized market in which the participants trade currencies, instruments, and stocks directly without having any intermediary. The brokers and dealers transact in this unorganized market without computer networks and phones. OTC trading is also known by the name of exchange trading because of the absence of a formal exchange. So, which companies trade over the counter? Well, generally, small companies which fail to fulfill the listing requirements of a stock exchange trade over the counter. OTC trade takes place between the two firms or financial institutions, and financial instruments such as bonds, derivatives, and currencies are mainly traded OTC. Dealers are the main players in the OTC market. They quote buy and sell products for securities, currencies, and other financial instruments. Since trade is carried out in this market without others being aware, they are considered less transparent than exchanges. These are also subject to lower regulations. For the same reason, the liquidity in the market comes at a premium. Now that we've established that, let's check out the key differences between OTC and exchanges. While buyers and sellers transact with each other in an unregulated way over a computer network or phone in the OTC market, exchange refers to a trade exchange where securities, commodities, derivatives, and others are purchased and sold in a regulated manner. Dealers quote this buying and selling price of financial instruments in an OTC market. The prices are determined by the demand and supply forces in an exchange. Small companies that could not fulfill listing prerequisites of an exchange trade their securities OTC. However, big businesses generally list and trade their stocks via an exchange. While OTC has no physical location and transactions are done over a computer network or phone calls, an exchange is physically present and uses the open outcry method. Trading is carried out in 24/7 in OCT, but the exchange has fixed trading hours only. While the OTC market is not as transparent as an exchange, participants have complete information about the securities being traded on an exchange. The contracts are customized as per requirement on an OTC. Exchange has only standardized products. OTC generally lacks a mechanism to arrest extreme highs or lows in security prices due to short-term imbalance between demand and supply. Exchanges, on the other hand, manage the volatility via a trading halt in a particular stock. Well, that's all on OTCs for now, but if you like this info, give us a like, comment, and a share on our video. Please sub to our channel as well, and while you're at it, press that bell icon. For regular updates and info, log on to our website at kalkinemedia.com. This has been Holly Shields for Kalkine Media.